Hi, Askar, and thank you for joining us today.
Hi, James. Thank you for inviting. That's a pleasure to be here.
Thank you. Askar, I want to provide you with a framework on where I want to take this discussion, and I really want to touch on four elements. The first one being Kazatomprom and just an overview of the company. And then I want to touch on the spot market, followed by the term market. And then I want to end our conversation with the discussion on the supply and demand and where the long-term price of uranium is going. So why don't we just start with an overview of the company, even though Kazatomprom is the world's largest uranium producer, producing approximately 23% of world production. A lot of people aren't familiar with the company. So why don't we just start with a brief overview?
Well, sounds good. Kazatomprom is the national operator for atomic products in Kazakhstan. It was founded in 1997, and at that time, not Kazatomprom, but even Kazakhstan was not kind of a very big player in the uranium space, producing less than 1,000 tons just 20 years ago. And now, essentially, we're being the largest producer in the world with over slightly more than 24,600 tons produced in 2016, which was our record. So a lot of growth that I mentioned happened during this so-called uranium renaissance time. And that was also the time for most of the markets picking up. So there was big interest for the global commodity markets. Uranium was a part of that movement. So what Kazatomprom was producing that time has been soaked up by the market, and kind of the timing for increasing production was very, very good at that time. So we should mention that Kazatomprom or Kazakhstan ended by producing about 40% of the global primary production, and Kazatomprom's share is 23%, just attributable share. So Kazakhstan and Kazatomprom have actually come a long way, and Kazatomprom is now the largest uranium producer since 2012. The reason why we're the biggest uranium producers is our unique mines and reserves that we have. All of them are ISR method. So we should mention that we're sitting on 300,000 tons of attributable reserves, and keeping in mind that we can produce 13,000 tons per year. That's a decade of production. And even if we look more widely, we also have resources which is closer than 500,000 tons, and converting resources into reserves is very straightforward. All the deposits are large, they are homogeneous, and kind of their unique feature, as I mentioned, is the ISR method. So all ISR method applies to all of these reserves and resources. So we don't use any open pit, any underground mining. Kind of what we do is very similar to oil production. We have the wells where we just pump the low pH sulfuric acid solution. It goes underground for an average of 600 meters and travels through a sandstone hosted with uranium deposit, and stays there for the period for 3 to 4 months, and then we just pump it out. So kind of that's the ecologically very friendly method with a closed cycle. So the liquid that we are pumping out and removing uranium, then actually this liquid goes back to the well field. So that's a very closed cycle. We don't generate any wastes.
And at your peak, you said you produced 24,000 tons of uranium?
Yes, indeed.
How would that compare to the second largest producer in the world?
Well, I think at that time the second largest producer were Cameco. They had 2 mines and Incai's share that they had, so they were almost twice less than ourselves.
Right. So you're just not. If I was to use an oil analogy, Kazatomprom is just not Saudi Arabia. It's really the OPEC of the uranium market.
Yeah, sort of.
And as Chief Commercial Officer, what exactly does your job entail?
Well, yeah. So the chief commercial officer in our company, the role of the chief commercial officer in Kazatomprom is kind of making the strategy in terms of marketing and sales, but also in that position, I oversee the kind of all the activities around logistics, around deliveries, around the contract execution, and also I oversee the activity of our trading company in Switzerland.
Askar, Kazatomprom went public in 2018, and shortly thereafter, the board of directors and the management team adopted a value strategy, which is essentially becoming more prudent in terms of your production and also in your marketing. But can you just touch on that and expand and tell us what policies you implemented?
Yeah, thank you. Very, very good question. We indeed adopted a new strategy in 2018, and it is valid through 2028. So the main parts of the strategy is that we are focusing on uranium mining as our core business. We are optimizing production and sales volumes based on the market conditions, which was not the case before kind of the IPO era. So also, we're creating a value by enhancing, as you said, marketing and sales capabilities. We're implementing the best practices from all over the world, and we're developing our corporate culture that sustainable industry leaders should have. We implied this strategy of responsible producer, and we decided to produce as much as the market needs, actually. So we're not following what we are producing and trying to sell it, but now we're kind of setting the targets based on the market conditions, and then we set up our production guidances. So you had seen our publications that we've made in 2018 when we kind of decreased our production to minus 20% from our subsoil contracts level. We didn't see much improvement, so we extended that strategy for 2021, 22, and just recently we announced that we will be following the same strategy in 2023. So kind of for us to consider returning back to 100% levels or even going over that volume, should be kind of, we should see certain market signals to do so.
So you've become a lot more disciplined in your approach.
Absolutely, we become much more disciplined. We were not producing as we used to produce. I mean, in 2016 the volume was 24.5, slightly more. Then we kind of stayed much lower of that volume, even though some of the subsoil use contracts even had an increase over the period. I mean, so we've never gone to that high production volumes, but kind of hopefully we will be sometimes there, and kind of market will need that pounds that are still in the ground.
Askar, that's a great overview of Kazatomprom, and now I want to get your views on the spot market and the recent price volatility. The spot price has moved significantly here in the last few weeks. It's gone from 30 to as high as $50 a pound. How do you think utilities are reacting to this price movement, if at all? Do they pay attention to the spot market?
Absolutely. I mean, they are closely watching what's happening on the market. We just recently had a fuel cycle members forum of WNA just a couple of days ago, and we had a panel discussion there. And on that panel discussion, we had Enusa as one of the utilities. They said that, well, you know, we are watching closely. We're not doing quick steps. They are analyzing, but I mean, everyone who participated agreed that we will not be seeing the market as it was last year. I mean, active participation of financial players like Sprott and like Yellowcake, I mean, changed market. significantly, even though we might see some correction of price in the future, but it will most probably not return to the levels that we had seen in this summer. Additionally to this, I would say it's not only the active position of yellow cake and Sprott, but generally, I mean, the industry is moving towards nuclear, bigger exposure to nuclear. We are seeing those initiatives being included into the green policy parts. Decarbonization is also a big part. We are waiting for Europe to accept nuclear as a clean energy source, kind of to help to reach their targets that they've committed under the Paris Agreement. So all these expectations, all these movements played a combined role together with big interest from financial players, which we haven't seen before as well. So these are all good mix and combination of the things that happened on the spot market and kind of led to that price discovery that we had seen.
So even though the spot market can be very active, it's estimated that only 25% of the trades on the spot market are real in the sense that they're going to real buyers, the utilities, and the rest is just pounds being exchanged between traders. Do you think these new market participants like Sprott and also Yellow Cake will make the spot market more efficient?
Absolutely. I mean, we are already seeing how they are impacting the spot market. I mean, they are taking the material from the near-term and mid-term market and just putting to their kind of account at the conversion facilities. So those pounds currently are not returned back to the market and not being resold to other market participants. So, I mean, the carry traders are having tough times at the moment because there is less and less material available on the market, and what is available is being kind of taken by financials or producers, as we could see. I mean, we were on the market, Cameco constantly on the market. We had seen even junior producers coming to the markets and buying the available volumes to hold them, which is, I mean, very good. But to your previous question, I would also add, I mean, we had seen the utilities returning back to the market earlier this year. Usually they have a good holiday period by September, and usually we see them more active after WNA event, which happens in kind of first week of September. But this year we've kind of seen them returning to the market slightly earlier. They were active from mid of August. We had seen several RFPs. Some of the utilities were very lucky to catch the pounds before Sprott came to the market. Others are evaluating what offers they have on their hands. And I mean, now the RFPs and tenders are not just near-term and mid-term period, but they're covering bigger periods starting from 2024, 5 and onwards, and going up to 2030, which was not the case before. And the kind of number of those requests and RFPs are much, much higher than we had seen even in the past decade.
So you raised some very good points here, and I just want to touch on a few of them. So the RFPs that are present in the market right now, they're longer term. And so if I understand you correctly, in the last few years, they've been short term in nature, 3 to 5 years, but now they're looking 5 to 10 years out.
Indeed. So utilities for the last decade, I would say they were in the market which was oversupplied, and in the end of the year they were always coming to the market and they could always find any pounds they needed. So there was an excess of material and they could even declare the pricing that they wanted to see in order to get those pounds. So it was oversupplied market, which has started its movement when producers announced the production discipline. Some of the mines had to go offline because of the financial conditions, and they couldn't sustain the production at that market price levels that we have seen in the end of 2016. So with the market starting to move into the kind of responsible production part, we had seen a lot of the material being removed and stayed in the ground for the future period. So now market is, for the second consecutive year, will be in the deficit because of the COVID impact mostly. But still, I mean, the years which were expected to be more balanced years will be deficit years. And those pounds would not be kind of catched up by Cameco or by ourselves in the future. So they are kind of lost pounds and they will not be returning to the market. And I mean, more we look for the forecasts of our industry experts, we're seeing that the structural deficit will start rising in after 2026, and then it will be just increasing. And by 2030, we would be seeing a very big deficit, which would be even greater than another Kazatomprom.
So many small producers sell uranium into the spot market. You touched on that earlier. Does Kazatomprom sell into the spot market?
Good question, James. I mean, just recently we've made an announcement that we completed our sales plan for 2021, and we will not be selling anything to the spot market. But even before, we were very disciplined in terms of spot sales. After we adopted our strategy, we were more focused to work only with utilities. So we have some contracts and activity when we are working with financial institutes, but usually we do so if we see that our strategy matches with them and kind of our long-term view matches with their long-term strategy. So, but generally we are more focused on utilities, our priorities with them, and that's why we are not kind of selling our pounds at the spot market. We have our trading company, THK. They are very active on the spot market, but the volume they trade there is very insignificant, very small. So they are acting as a normal trader. They are getting market intelligence. They are exchanging volumes. So kind of sustaining the liquidity of the spot market.
So once again, you touched on this a couple of times, but once again, it's all about being disciplined, and you want to sell your product to real buyers, utilities who have a real use for it, and not to short-term traders who just want to flip it for a quick profit and in the process distort the market.
Absolutely. I mean, that's our strategy. We're not doing business at the moment with traders. We're not reselling to intermediaries. So we are just focusing on long-term market with our utilities.
So that's a good overview of the spot market, and you touched a little bit on the term market, but I want to just expand on the term market. And can you just speak to the contracts that are out there? And I want to get a better sense of how that market works or with the utilities, because a lot of these contracts that were set 5 or 10 years ago, they're going to start rolling off in 2023. So you, as the world's largest producer, how do you react to that, or how do you change your production plan?
So the long-term contracting actually started when there was this uranium renaissance, when there was a big shortage of supply on the market. So in 2008-10, till Fukushima has happened, actually there was a long-term contracting, and the contract period was 10 to 15 years. So that was kind of normal for the market at that time. But when Fukushima happened, actually market started to revert, and we had seen less and less long-term contracting, and instead we had seen more spot contracting and near-term contracting. So as now the market is going to revert back again, we're more expecting utilities to start discussions over securities of supply, because I mean they cannot afford themselves to to be in a position when they don't have a uranium, which is the main product for their reactors that they have to run. So that shift is happening now. We're seeing the requests and tenders being issued for much longer time periods than it was before. Before, they were coming and requesting a certain volume in a certain year, or just a kind of very small volumes like 300,000, 200,000 pounds per year for a 3-year period. Now the periods are becoming longer and quantities are becoming bigger. So that's what we're seeing. I mean, all of this is being pushed by overall demand. I mean, with ins and outs in nuclear power plants all over the world. I mean, the general trend is increasing by 1.5%. And as WNA predicts, I mean, in 2040, we will have twice more electricity generated by nuclear than it is in 2020.
And when you say the contracts or the pounds that are demanded are growing or becoming bigger, how much bigger? Like, are they asking for, is it going from 100,000 pounds to 1 million pounds, or how much are they looking for or asking for?
Well, yeah, I mean, depends on the utility which is coming, but I mean, even the small utilities, they've increased their volumes almost twice. And just I'll try to give an example, which is public, I would say. China just recently announced their 5-year plan for building nuclear power plants and electricity that they will be generating from nuclear. So the plan is very ambitious. They are going to generate 70 gigawatts from nuclear from 40 that they're generating now. So they will be building much more nuclear power plants. And just after they've made that announcement, in June, CNNC has announced that they will be building a big warehouse on the border of Kazakhstan and China, which has to store 23,000 tons by 2026. So that's an estimate, and I mean that's a very significant quantity that most probably will be used as a strategic inventory that China would be using to make sure that they will have necessary pounds to support their nuclear program. So that's one of the examples that we can kind of share. And I mean, that's not only China who is being worried about future security of supply. So other utilities are also there, but they would like to see that the current kind of price movement and price increase, it's not a temporary move, but it should be something that will be for long term.
And once again, I just want to reinforce that all these changes that are coming, and especially with the long-term contracting and the way it works within this industry, this is one of the reasons why you've curtailed production, because you know these contracts are coming up for renewal, and these utilities are going to begin looking for a lot of pounds. And so you want to make sure you're ready for that. And at the same time, you want to make sure you get a good price. You'd rather sell uranium at $43 or $53 a pound as opposed to $33.
Well, absolutely. I mean, we would like to have the value for the pounds that we're selling. And if we are to increase our production, and if we are to start any new greenfield mines that we have, I mean, we should convince our board to spend those money into the investing, and we should see some incentive price, which we're not indicating as we are the lowest cost producer. But I mean, such decision that we would be making in terms of increasing our production should be supported by the long-term contracting that we have to see from the utilities. So without this long-term contracting, I mean, it would be hard to convince our board or to make decision to increase the production.
And you brought up China and their demands. And I also want to just touch on France, given that 70% of their electricity comes from nuclear reactors. And it's estimated that they use 25 million pounds of uranium annually. So, given their demands, they just can't phone you up today and say, hey, I need some uranium next year. They have to think 5 or 10 years out to make sure they have the supply.
Absolutely. I mean, EDF remains our strategic partner, our strategic customer. We have ongoing contracts with them. Unfortunately, I cannot disclose the volume of the contracts and the period of the contract, but I mean, you are completely right. I mean, EDF is a company that has a good strategy in terms of making sure that they have security of supply.
So that's a great discussion on the term market and also the spot market, Askar. Now I want to move on and tie it all together, and I want to look at the supply and demand side and the fundamentals and try to get an idea of where the long-term price is going. And you mentioned this before, we have this whole green economy and decarbonization. And according to the World Nuclear Association, there's 443 reactors that are active in the world right now. There's 57 that are currently being built. There's over 100 that are planned on being built. So there's a lot of demand coming from the reactors. And then with the whole green economy and the push toward net zero emissions, the demand side looks very robust. But then when you look at the supply side, as you mentioned, the supply, you and other producers have really cut back, and it's estimated that between 2021 and 2030, there's going to be uncovered demand for 700 million pounds. So having said all that, do you think it's different this time?
As you mentioned, the demand side is very robust. It's increasing. We will have more and more reactors being built, especially in Asian countries, in China, in India. We hope that they will be followed by Eastern Europe, maybe some part on the Middle East, as we had seen newcomers to our industry like United Arab Emirates. So we should also expect maybe SMRs to come to the market as well. That will be an additional, even more bigger demand. I mean, SMRs have a big and great potential to reshape the whole industry. But yeah, you're right. At the moment, we don't have any replacement for uranium as a fuel, and it has to be produced in order to make sure that all this industry will have enough material. I mean, as I mentioned in the beginning of this interview, we have a great resources and reserves, and again, we would like to make sure that we have incentivized value to invest into these deposits that we have. And I mean, these discussions, I think, are starting now. They are not very quickly starting, but we're seeing utilities starting to discuss some longer term volumes. As we were indicating, we're not setting a certain price like other utilities or like other producers are doing. For us, much more important is having a contract portfolio that will be letting us to increase our production. In terms of price, that should incentivize producers to bring new mines. I think we should refer to the idled capacities that we have on the market now. And the most obvious one is MacArthur River by Cameco that has to come online next, because that's the top class mine with all the capexes in. They just have to restart it back. The price should be followed by the contracts. So if we would be seeing that intention from utilities to start discussing with the big sustainable primary producers to bring idle capacities, for Cameco it's MacArthur, for ourselves it's returning back to 100% or even going more for 120%. But in terms of greenfield projects, I mean, there should be something more than Cameco's restart for MacArthur Prize to incentivize. And as we discussed, I mean, the volume is too big to be covered only by Kazatomprom. That should be kind of several primary sustainable producers that should be incentivized by the industry to bring those pounds to cover this huge gap that we are foreseeing.
So once again, it's estimated that between 2021 and 2030, there's uncovered demand for 700 million pounds, which is a lot. And you also mentioned earlier that the market essentially needs another Kazatomprom. And is there another Kazatomprom out there somewhere?
Well, you know, it's hard to discuss the mines outside of Kazakhstan for ourselves. I mean, we are not very sure if they are sustainable mines. I mean, we know that they have a big reserves, but we are not sure about their capexes. Their estimated production costs might be very attractive, but I mean, only time will show if that's the case or not. So for any future production outside Kazakhstan, I wouldn't kind of comment on that. But in terms of Kazakhstan, we have enough production to make sure that that we will do everything we can to support the industry. But I mean, as we said, there should be some other primary producers incentivized to bring their mines as well. It cannot be just Kazatomprom trying to bring the pounds to the market.
So you tell a very bullish story for uranium price and where the long-term price is going. So I want to put you on the spot now, Askar, and ask you where you think the price of uranium will be in 5 years.
Well, you know, that's a very, very interesting question. I mean, if you would ask me 1 month ago whether the price would be 50, I don't think I would say that it will be 50 just 1 month ago. But we're now at 50 with all this kind of activity on the market and kind of Sprott doing a tremendous job. I mean, they've actually shown to the whole market what's the real depth of the market, and that the spot market should never be considered as a reliable source of a long-term supply. So with a kind of price being formed at the spot activity, which you also mentioned is only 30% going to the real utilities and other material is going back and forth, I mean, it's very hard to predict where it would be because that price is not a fundamental price, or let's say is not the price set by kind of fundamental moves. So we might more look to this long-term price, but where it will be, I think it has to be somewhere where the new incentivizing price for the mines should be.
Askar, typically when I wrap up my conversations, I always ask the company what investors can expect in terms of news flow in the coming weeks and months. But given the size of your company and also your long-term outlook, I'm going to have to ask you what investors can expect in the coming years from Kazatomprom.
Well, I think investors should expect that we'll still keep our strategy. We will still be valuing all the market conditions before making any decision about production. But at the same time, we don't want to have shocks on the market. We don't want to repeat the story that we had seen in 2007 and 8, when we had this huge increase of the price with a quick fall. So we would like to have the market be in a sustainable kind of condition without huge peaks and shocks. So we're, as we indicated at pre-IPO, we have some deposits that we are developing. So we are kind of starting to prepare some of the assets that we might need in the future, because some of our mines are also running out, and we'll have several mines that will kind of go offline by the end of this decade. So we need to replace them, and we need to make sure that whenever market gives us certain signals and we understand that utilities need more pounds, we should be on time. So we are doing some of the exploration on the deposits that we had indicated in our IPO documents. So generally, I mean, as I said, we will be keeping our market discipline. We'll keep our market-centric strategy, and we will be focusing on the long-term market with utilities. That's what the investors should know.
Askar, that's a great overview of Kazatomprom, and also I enjoyed hearing your reviews on the spot market and the long-term market, and also the supply and demand dynamics. And I want to thank you for making the time today, and you've been very gracious. Thank you.
Thank you, James.